The prospect of a U.S. Fed rate cut may be pushed a little further, as latest data showed a rise in the U.S. consumer prices. However, the latest CPI figures still led to a rally on Wall Street, with the S&P 500 reaching a new all-time high. Our Seung-jae has the figures.
According to the U.S. Commerce Department's Bureau of Labor Statistics on Tuesday, the U.S. Consumer Price Index rebounded slightly in February and remained stagnant in the low 3% range. The latest data showed that U.S. CPI rose 3.2% compared to the same month a year ago and was up 0.4% from the previous month. U.S. inflation peaked at 9.1% in June 2022 and has since slowed down, fluctuating in the low to mid 3% range since June 2023. Meanwhile, excluding volatile food and energy prices, core CPI rose 0.4% in February, up 3.8% on year. Both were slightly higher than market expectations. The increase in energy and shelter prices accounted for more than 60% of the total gain. However, despite the slight rise in the U.S. consumer prices and the prospect of the U.S. Fed freezing its key rates further, Wall Street reacted positively to the latest CPI data, with the S&P 500 climbing to a new all-time high during Tuesday's trading session. The S&P 500 rose more than 1% on the day to close at 5,175.27, breaking the previous high set just 3 sessions ago. The Dow Jones ended trading up 0.61%, while the tech-heavy Nasdaq rose over 1.5%. According to a senior investment strategist at U.S. Bank Wealth Management, rising inflation is an indication that consumers are doing well and that the slight rise in the CPI isn't affecting investor sentiment. Seung-jae, Arirang News.